Welcome back to the channel. My name is Patrick, and in today's video I'm going to show you how I find my entry when scalping on a daily basis. If you're someone that's struggling with scalping or finding your entry, this video is going to be very useful for you. So if it is, you know what to do. Hit the like button, hit the subscribe button, support the channel, and I keep on getting examples like this out to you guys. Let's get busy. Okay, before we jump over to the charts and I show you examples, I want to talk about price action quickly. So let's go back and have a look quickly at market structure, and then we know what we're looking for when we jump onto the charts, okay? So here we go. What we have here is what I consider price action. This is what I see on a daily basis. You may, depending on when you start trading, you may see fragments of this on a daily basis. And if you zoom out on a higher time frame, you can see a portion of this, okay? So whether it's this part here, which is the uptrend, whether it's this part here in the middle here, which is a reversal, or whether it's this part here, which is the downtrend. So let me walk you through it. So if it's moving in this direction, in a pole and flag formation, this is how I know it. So it poles up, flags down. So when I say pole and flag, I'm talking about a checkered flag. So you have to imagine that. So it poles up, it flags down, poles up here, flags down, poles up, flags down. This is also known as an uptrend. We all are familiar with that term, okay? I know it as a pole and flag formation, okay? It's poling and flagging up, okay? So once it gets to this point here, you would expect it to pole out again and continue that trend. But what we have here is a pole out, flag here, pole, but this high here does not beat this previous one. So that's actually the first indication that price is potentially reversing, okay? So when it doesn't beat that one and this then breaks down and breaks this low here and goes on to break this low, that's the start of a reversal, potential reversal. It could be manipulation, it could be just a run on these stop losses that's here for people try to do breakout selling. But usually this is the start of a reversal, okay? So if this is the case of a start of a reversal, what we need now is for it to flag back. So this is reversal, we're looking at it in the other direction. So it's poling down, flags up, poles down, flags up, poles down, okay? So we expect it to flag up, and this high now respecting this previous high, which in turn has started a downtrend. So we have a high, a lower high, and a further lower high, okay? So lower highs, lower highs, lower highs, downtrend. Higher highs with higher lows, uptrend. Lower lows with lower highs, downtrend, okay? Doesn't matter, this should be straightforward. Let's keep it straightforward. So it's pole, flag, downtrend, okay? So that's the three conditions we're looking at, whether it's an uptrend, a reversal, or downtrend. And essentially, this is what you can scalp on a daily basis. Examples like this is available on a daily basis. So that's what we're looking for. We want to be able to scalp on a daily basis, and this is what we're going to scalp, okay? So I've talked about this in previous videos. If you haven't seen the last video, it's probably going to be in the link of this video. So have a look at that so you can see exactly what I'm talking about. What we're going to do now is jump over to the charts. I'm going to show you some price action from the previous days, and we then look at and see what we could have done, whether we could have caught the trend or we could have caught the reversal, depending on the session you trade, okay?
Okay.
So let's look at, today is Monday, not a lot going on Monday, so let's look at on Friday, what we could have done on Friday, okay? So it's just zoomed out, you can see already, it goes up and it comes down. So this is actually a perfect example of what I just showed you. So we have the uptrend, we have a reversal, we've got the downtrend. So I'm gonna zoom in a little bit now, and we're gonna talk about how you could have traded this. So the way I look at it is we all trade different pairs, we all trade different sessions. So what I try to focus on is my session, and obviously when you're back testing, that's what you should focus on, because you want to focus on when you get into the market, right? So having a look on Friday, my start on my session is usually at just about here. Okay, just about here. That's usually when I first have a look at the charts. Okay, so previous to that is the Asia session. Around there is New York session. New York session starts for me just about there. Okay, so Asian session, London session, New York session, roughly. Yeah. So for me, I'm usually looking around this period of time. So when I got into the market, when I was looking at it here, I had the option whether so what I observed first, or I always zoom out actually, I observed first is that we have a trend which started from here, okay? So it's been trending up, okay? So I'm looking at this price action on that day, and I'm trying to consider whether I want to continue the uptrend, because we've got uptrend right now. Do I want to continue this, or do I want to wait for a reversal? In this scenario, so we've got a low here, and we've got a higher low here, got a higher low here, and just before I get into the market, we've got like almost equal lows. I am not looking to continue this uptrend, okay? Me personally, I'll be looking to have waited for the reversal, which is what happened here. But however, you could have actually traded this uptrend, and to do so, I'm going to show you how. Okay, so this is all about entries.
Yeah, boy.
So flag and pole formation, there's two entries. Okay, so I'm going to show you them now. So let's look at, say, let's see if we've got a nice price action here. So we've got a little flag and pole here. So we've got this pole up here, flags in here, and then poles to continue this trend. So flag and pole, you've got two entries. You got the high, this high where it pulled out that high, and you got the 50% mark of this range. So from when it flagged down 50% of this flag, you could look for an entry there. So you could actually, to really fine tune it, you're looking, actually I'll say that for another video. I've got another way of fine tuning it, but to be on the safe side, to not miss a trade, you're looking for about 50% of this high to this low, okay? You could use a fib tool, but as you do this, often you'll be able to see it with the naked eye, okay? So as it pulls out, it pulls back in, you could enter on this open here of the breakout of this flag, so like a break and retest. If you trade break and retest, you know what I mean? You can enter there, or you could wait for it to pull in further to enter here, okay? So you could call it here, and in terms of risk management, I always leave when I'm trading with the trend, I want to leave my stop loss at the bottom of the flag. So we have the pole here, we have the flag here, okay? So I want to leave my stop loss just here, okay? So that's my risk. So if we entered, say, midpoint here, as you can see, that would have been a very good entry. You would have entered here, and you're only risking 6 pips, and the potentially you could have made 26 pips, okay? So me, I tend to scalp it for 10 pips. Depending how you scalp, whether it is you're scalping for 5 pips, 10 pips, 15 pips, whatever your preference is, whatever you back tested, I mean, try be strict and disciplined. To be a good scalper, to be consistent, you need to be able to have a fixed TP, in my opinion. So that will stop you from staying in the market, being too greedy, making mistakes, and you don't want to have a non-structured approach when scalping. So for me, it's always 10 pips, and that makes me get in and out of the market as soon as possible. So I go for 10 pips. So that's a good entry. You could have traded with the trend here, continued it. So entered here, 10 pips, would have got that 10 pips, you would have got more, and you risked only 6 pips. So that's a very decent entry, very simple trade. So let's keep moving. So we could have also actually caught the reversal of this trend on that day. So from here, in that session, in the London session, price carried on trending from the previous session, the Asia session. It drove up aggressively here, pulls back in. So anyone who was following this trend would have looked at this again. So flag and pole. So it pulls out here, flags in here. That's the low of the flag, and it pulls out here. So flags in. So the break of this is that swing high and the low is here. So as it pulls back here, people could have entered here to continue this trend, and especially because it went so aggressively, that would have enticed you into the market. So you could have entered there, placed your stop loss underneath there, and tried to get this drive out. But what would have happened is you would have got stopped out, right? Because price had actually reversed. So again, to do the reversals, we have a drive up, a pullback, a fake continuation, then a break in structure. When it broke this flag low, that's when we're looking for entry. So we could again enter on the open of that break, or we could enter based on the previous flag and pole formation. So previous flag and pole formation. So we had the pole, a flag, a pole here that broke that structure. So this is what we're interested in. So let's just get rid of this for now. Let's clean this up a little bit. So pole, flag, poles out, okay? So as price pulls back in, you could enter on the open. I mean, you could enter the open from this candle that broke out. You would have saw that on the lower time frame. So it broke here and pulls back in. That could be your first entry. And this could be second entry. But if you miss this entry, you could wait it and for price to pull back in. And again, roughly from this low to this high, 50%, we would have caught a really nice entry. And I know some people leave the stop loss just above here. I prefer to be a bit more cautious. I would leave my stop loss here or here, depending on the range. If this is like a 30 pip range, let's just check quickly. This is a 22 pip range, okay? So 22 pips, I don't like risking more than 20 pips. So I would have left my stop loss above here. So as price pulled back in, could have caught an entry there, entry here, and left the stop loss here. And then again, for me, 10 pips, that was quite simple, quite easy. As you zoom out, you can see where it went. So that was clearly a reversal of this trend, of the previous trend, as it's completely taken out all the price action here, all the potential stop losses there, it's taking it out completely. That was the reversal, okay? So the scalping setup I showed you guys, you could have caught it and continued the trend, or you could have used it to reverse the trend. And if you were really late to the party, you could have actually just waited for the new downtrend to be established, because that's what happens when you get a reversal, you get a downtrend. So you got price action going up, uptrend, reversal, then a downtrend. So you could have actually caught this pole, flag, pole, flag, pole, flag formation going down now, okay? So let's go. I mean, this is really what I do on a daily basis. I either scalp the trend going up, wait for the reversal, scalp the reversal, or wait for the downtrend and scalp the downtrend, depending on when I get involved in the market. And really, this is all you could do. This is all you need to do to catch a scalp on a daily basis. So depending on what session you trade, whether you're traders from the US trading New York session, or you are in the UK or Europe trading London session or European session, this is what you can see on a daily basis, okay? All right, let's go to, I'm gonna keep it funky. I'm gonna keep it real here. So we got Thursday, not a lot going on, but we're still able to catch a trade here, okay? So let's go to Thursday quickly. And we don't need these perfect examples. We need examples that we can actually use on a daily basis. And this is what I'm showing you on this channel, people. Hopefully you're appreciating it. And if you are, you know what to do. Keep supporting the channel. I'll keep getting these examples out. All right, so clearly previous session, downtrend. So we have the option to continue the downtrend or wait for the reversal. So this is the start of my session, my trading session. So let's see, okay. So we have a downtrend. So poles, flags, poles, kind of break structure. If we wait a little bit, we'll see this is slow price action. So that's why I don't trade this session. It's very confusing when you've got this kind of price action. But what happens, eventually it pulls down and breaks this low, confirming it's still downtrended. So that's a pole, that's a big flag, consolidation, and pulls pulls out again. So I had the option within my session to continue this downtrend, and that's the easiest thing to do. So it just pulled down, broke structure here. So when it pulls back into that flag, into that flag that broke structure. So from this low to this high, as it goes pole, it flags and pulls out. So as it pulls back into this flag, we have the entry at the open, and we have the high of the flag there. So 50% of this flag is yay. Okay, so again, it pulls back. So it pulls out, it flags back in. So when it flags back in, you could enter at the open, or you could enter at the 50% mark, again giving you a very nice entry, and your stop loss could have been just above the flag, the previous flag. So let's have a look at that. Based on the entries, you could have been risking from the open to the flag high 10 pips, or you could have been risking from the 50% mark to the flag high again 5 pips, and potentially you could have got yourself 26 pips. And this was on a slow choppy day. Okay, now the reversal was also possible within the London session. As you can see, it just does go back up, and the reversal was available here. So again, pull on flag, pulls out, flags here, pulls out, should flag in here and continue. But as you can see at this point, it doesn't break this low. It actually reverses and breaks this last flag. So that's the start of a reversal. So let's mark it up for the reversal. So that shrink high here where it broke. Underneath here is where we want the stop loss. And then we are entering either 50% of that pole and flag that broke the structure, or we are entering at the open. So you could enter at the open here, or you could wait for price to pull back at 50% and enter there, and your stop loss is underneath there. Okay, so I mean, with these two examples, I don't want this video to go too long, but with these two examples, you know what you're looking for now, and you can actually go away and back test this. And all reversals or all downtrends don't just continuously go down. It just goes to fill gaps, people, and then it goes again. Yeah, so scalping, you don't need to worry about that. You get what you came for, and you're done. So reversal was available there as well. So that was all last week price action. As you see, you could call either the uptrend, you could call the reversal, or you could call the downtrend, depending on when you are ready to enter the market or what session you are trading. So I'll show you now all the entries, or how to find the entry using all the setups, well, the two setups I scalp. Hopefully this has been very useful for you guys, and if it has, support the channel, hit the like button, and I keep on getting these videos and examples like this out to you. This is Patrick signing out. Until next time, peace.